12, about 9-10 minutes after 12. And here we are back with another edition of Chart the Markets. My name is Mark. I'm from Blundhouse Technical Analysis, and I'd like to thank our good friends at FEG Token and smartdefi.com, and of course our exchange partner BYDFi. And you can head over to BYDFi.com, enter capital K, 5, capital Z, 4, capital T, lowercase p, open up a new account, and you are eligible for our 2 trading bonuses that we give away each session. But before we go any further, let's just start looking at charts, because that's why we're here. And here we are with Bitcoin's daily chart. And if we kind of go back to Tuesday, which is this day here, we said this is starting to look like a failed breakout. And if that's the case, what happens with failed breakouts? We come back and we take out the previous wave's low, which is what we've done. And additionally, we've taken out that 109.4690 number that we had in there from last week. And then, of course, I think it was our last session, or maybe it was a session before, we dropped in this level here at 94,422.98. Don't worry about the pennies. We're just trying to give ourselves a rough area of where we could be going next. And what are we doing here to determine this? And, this stream is talking about how, trying to pick tops and bottoms is a sucker's game. Looks easy on the chart, right? And when you see it post candle, but in real time, it's a challenge. And we're not here to pick tops and bottoms. That's not what this is called. Right? We're trying to monetize the chart in an effective, safe, profitable way. That's what we're here to do. And when we look at this chart, and we come back each and every week and we talk about what happens when you start trading below our filter level, which is the T line. And when you break one level and you find the next, and current price starts looking for past, here we are. Right? And there is no crystal ball involved here, but is all I know is that when you're trading below these levels, you're bearish. And here you go again. This is a trend that has not changed, and because we use fractal analysis, we'll make it look really simple. On the weekly chart, here's the top and here's the breakdown. Now you can sit and look at your Bitcoin chart all day long and say, I'm going to try and pick a top, I'm going to try and pick a top or a bottom. And it's very, very, very hard to do. Right? It's not something that you should wake up and make your objective. Just follow price. You don't have to lead it. It's not a predictive game. Just follow what the chart's telling you. That's really all you have to do. Okay, now that we've taken out that 100,946 level, and you look at this weekly, this starts to look, you start to feel real uncomfortable. Right? You can tell that this level in here is somewhat structural, and you really want to maintain that. Because we use a volume profile, we can identify all of this light trading. Yeah, price went up, but understand there's not a lot of substance in that move higher. Not a lot of volume behind those candles. And the volume profile is kind of giving you a range and an average of where the most dense volume is, thus the most dense trading. And when we're working under the assumption that current price will look for past, well, the volume profile is telling us that, holy smokes, it's way down here on the weekly at 44. That's the upper value range. That sounds nuts. Even to me, right? It sounds like it's crazy. But we didn't think we'd be talking sub 100 either. But here we are. But if we try and add some context to this chart just real quick, we broke the 20 on the weekly, and we know that current price revisits past. We've now broken the 50. We talked about this last week. Don't want to break the 50, because if you break the 50, you could have a problem. This is the support you've had. You don't want to break it. Not that this candle is going to, finish writing the story. There's obviously another one that comes after, but you just don't want to start breaking important levels. This is the ice. We don't want to break the ice. That sucks, right? You want to stay, you want to stay above the ice. So looking down, if we kind of come back to that 94.4 level that we threw on here, it's a huge, huge fall between the 50 and the 200. But if we throw the 100 on, which sometimes comes into play, it's right at a structural level. And that's it, even that sounds extreme at 82, 83, but still, this is a real slippery slope. You can't will price up. Smoke signals don't help. Right? Promising to be good doesn't help. If price is trading below this level, you're bearish. And you're bearish until the market tells you otherwise. And that typically happens at areas where price has been before. So in the event of a move up or down, as current price looks for past, it's going to find it in the form of either major moving averages, which are representations of time and price, or structural levels, areas of liquidity, however you want to identify these things. But they're easy to find on your chart. But I've been saying I'm feeling uncomfortable about this for a couple weeks, and you can start to see why. Here's your monthly Bitcoin chart. You haven't produced a sell signal since, this was the last time you saw one, which triggered in April of 22. Yeah, that's like almost 3 years. So this pullback on the monthly just could get support in and around this structural level and or the 20 moving average on the monthly. And is this the first touch? Would it be the first touch if it was to hit it? Yeah. Which would mean it's more likely to bounce or at least get some support. So we'll have to see how this unfolds. But right now, I think it's looking for some past price. This level in here, which is a little uncomfortable. So on the daily, you can see you've broken everything that was once support is now resistance. And even if I throw some long-term stuff on here, that doesn't make you feel any better, because even the next level down, if we tag the 500, that's well below 95. It's 92 and change. Right? And again, what would that represent? Areas of past price. So this is kind of getting slippery. You can see you're making lower lows and you're making lower highs, and those are the basics of trend identification, right? And you notice on your daily, you failed the 200 and the 20 all in basically one candle, and you're working towards a gap here. You fall into this gap. We know what happens because there's not a lot to hold price up. How did this get created? Look back to your left and you see all this big parabolic price movement. That's essentially where it's coming from. So yeah, big massive move up in price created this gap. And eventually we came back and we're going to test it. This is a critical level though. You can see here, you break all this stuff, it could get a little sketchy. Okay, so I wish I had better news, but the only thing that's going to change this is a significant amount of money coming in. Right? Once you're on the right side of something, though, whether you're long or short, you don't want to fight the trend, and you can see the trend on that chart was to the downside. Here's your ETH chart. And remember, we talk about this all the time. When you're trading above the 20, the 50, and the 200, we just happen to have everything lit here. But when you're trading above these levels, just be aware that at some point in time, you're going to come back and test them. Now, not every time when you test, you fail. You get nice bounces, as you can see. But eventually, you will start to break. And when you do break these levels, you can see that price has a tendency to go to where, again, it's been before. And you can see how critical the 50-day moving average is on this ETH chart. Now you're breaking the 200 just as you were on Bitcoin just a little bit later. So the next level down, you can see this wick in line with, this is the 500 MA month or daily at around 3,000, 3,018, something like that. And this is starting to look like a failed breakout, and your price is coming back and taking out the previous wave's low. Will it continue to move down? Well, does that look supportive of price, this big gap? Not necessarily. And you've got the point of control down here on ETH at 2,500. So I think it was the last session we started, looking at where the point of control was on ETH and on the weekly and the daily. And I think it was it's 2,500 here as well. So does that make me feel more comfortable that you're going to hit that level? Yeah. When they align like that, for sure. Look at this tag here on the weekly of this. Right, you'll see all this stuff because you're doing fractal analysis. You're looking at the weekly, monthly, weekly, daily. You want to know what the upside, downside risk and potential is, and you're going to find that on different time frames. But you can see here prices falling into a gap on this weekly. So this is kind of sketchy. There you go on the monthly. What are you hitting? The 20 monthly. Basically wicked it, pushed a little bit higher, but I don't think this is holding. Right? It looks like it's fading a little bit. And when you look at your other momentum indicators, like take a look at your stochastic RSI, right? Where do you like to make, the short and the long trades when they're really overbought and oversold? And when you can do that and have the support of a few other tools that might tell you you're going to be on the right side of something, like, the Fisher's using this Gaussian channel to keep the noise out. But we know what happens when it rolls over. It doesn't really throw many fakes at us. And the MACD, is the moving average and signal line well above zero? Yes, absolutely. But it won't be forever. And if it does arc down and start to fade, well, this is a monthly chart, so it's going to take what will feel like forever. But you lose this level here, you're going to end up back at the 50. And that momentum of this stuff to the downside is kind of how you get there. But looking for tops and bottoms is really dangerous. You're better off, in my opinion, focusing on trend. Like here's a chart of BNB, and I'm keeping these averages lit. And I know it looks like a bit of a rainbow, but I just want you to see what happens when price starts to accelerate. Right? It fans out all of these different levels. And, just looks like lines on a chart, like someone got a little nutty with crayons, right? Well, that's really not what's going on. Right? This is BNB, daily chart. Obviously a nice move higher. These are the continuations off the 20 we talk about. Here's our M pattern. M's are murder, W's are winners. Batman ears, whatever you want to call them. Double tops, 2 equal points. List goes on and on and on. Continuation off the 20, create that second equal point. If you bounce here, you're going to look to take out these previous highs, but you don't. You've actually failed the 20, and why? Well, you got support from it 3 or 4 times. So the more you get support, the more likely it is the next time you see it that you may fail it, and that's what happens here. But where does it go? It goes to the next level down. Fail one level, find the next. Right to the 50. Was it the first touch of the 50? Since it failed? Yep. So it bounced. Push price back to the 20 again. Fails again, comes right back to the 50. This time you fail the 50. Where do you go? Back to the 100. That's the next major moving average, the next level down. And again, we're not meant to play tag. We're trying to show you where price is likely to move. That's all we're doing. Now, what do we have to work with on top of that? Well, now that we failed this level, we have to look to the next, which on the daily, this is the 200 MA. And that's important. Why? Because it's the most basic bull bear indicator that we have. And we really want to make sure that, that you hold it. Because if you don't hold it, then you're kind of in a bearish market. What else are we working off of? Well, we have some signals, right? This is really volatile stuff. If we look at this signal in here, even on the daily, as we're playing around at these major moving averages, there's one thing that you have to pay attention to, and that's the divergence between the T-line and the 5 EMA. Because again, it's acting as our filter. It's telling us that we're kind of separating market noise from proper market moves. Right? We want to make sure we're on the right side of the trend. And this is telling us, as long as we have that divergence, that that's the case. So you may have gotten excited, hey, you got 4, 5, 6 green candles, the worst is over. What is this actually looking like? It's actually looking like a failed breakout that will come back again and take out those lows and be drawn to the 200. And you've got this volume gap in here. And they, you can almost hear the sucking sound up or down when price goes into them in a trend move. If it's moving up, you'll hear that sucking price higher, and when it's down, it draws it down. So this is kind of like, have you heard the expression, how did you lose your money? Slowly at first and really, really, really fast. That's kind of where we are. People will wake up and go, what happened? It's like death by 1,000 cuts. And, it kind of makes you question whether or not you want to be an investor or a trader, or which combination of each, if that's your stick. Because as we go through all of this, you're going to realize that you can't be both sometimes, right? As much as you want to, it's really hard to be both, unless you're disciplined. It's okay to be long something and short something at the same time, right? That's not unusual. But the only thing that matters is what's happening to price on the chart. What money's doing, not what people are saying, because this is a language. It's based on math. Math is a language, and this is a derivative of mathematics. So I truly believe that this is a language. This is the 4-hour Astor chart. I'm using the 4-hour because there's not a lot of trading here. And at least the 4 hours is going to give us some idea of what's going on. And what's been going on is it's just been in a free fall that, shows us little signs of life and then takes it away. As long as you're trading below the 200-day on any time frame, you're bearish, right? And this thing just can't get out of its own way, at least not yet. In the 4-hour chart, we kind of can get a little bit of a look inside that daily candle by looking at the 4-hour chart. And this failure of the 200 MA is not a good look. And as you fail the 200, you break the 20, you break the 50, you seem to break the 100 here as well. And what's it probably looking for? Well, broke the point of control. So in all likelihood, it's looking for this level where the lower value range is again, because there's really nothing in here to hold it up, and we know that what's on the north side and south side of the point of control is usually somewhat gappy, so it's likely that it will fall into that volume gap. We're really not doing anything super special here, right? Here's the 12-hour. The 12-hour is a big failure of the 50 and the 20, and it prints a sell signal. So did we know that something was coming? Yeah, because when you look at that 4-hour chart, it's telling you there's something coming around the corner. Whether it materializes into a continuation of whatever that trend is remains to be seen, but here's the daily and you're failing the 20. Like I said, this thing just doesn't want to get out of its own way. This is starting to look like a failed breakout here, right? And, you know, do you come back and take out these lows again? It's possible. We won't know until we print a few more candles, but this has just not been a good look. You know, the 50 is just starting to print on the daily. So, you know, eventually that will be a target to the upside, right? But we know it has to happen in order to change this trend. You're going to have to see some much more bullish activity on the 4-hour that gets continued onto that daily. And right now, it's just not happening. But I think, in all honesty, you know, we can look at the 4-hour chart of pretty much anything right now and have the same opinion. And this is Solana. 4-hour. Failure of the 200, failure of the upper value range, failure of the 500 MA on that time frame. And then it's just been nothing but down. What's it looking for? Probably this level that we've identified, and I think it kind of comes in line with down here, which is the 1,000-day moving average. Like that's that's a big fall. And I guess we've been in here and we've kind of identified some other levels, but we'll see where we go. Until this will take some noise out. This is really basic, right? Like here we are coming right back to the 20, failing it, treating the 50 like it wasn't there. You can see a little bit of love at the 100, but it's just this week it's just giving it all back. And look what it's looking for. All of this back in here is really just buyers and sellers that have shaken hands in the past, and in the event of a downtrend like you see, current price is looking for past price. So if we're trying to find targets, somewhere in here is a very reasonable target if you were short. And again, be aware that there is another level down if you don't hold it. And it's, again, we're not poo-pooing Solana or anything like that. It's just, this is just how price moves, and it doesn't matter what the asset is, and it doesn't matter what the time frame is. We can show XRP again, and we're not picking on XRP or anything like that. Here's our daily chart. Again, how relevant is the resistance of the 50 as it's tangled up with the point of control? Pretty relevant. Rejection at the 200. Rejection at the 50. Is that the first touch of the 200 since you broke it? I guess you could qualify this, but here's another touch. Fails. This is essentially another touch of the 50. Fail. Failing the 50 is not a good thing. And if this is a failed breakout, what happens? Then price comes back, it pulls, and takes out that previous wave's low. This is the 215.22 that we had in here that's been hit a couple times now. Failing this, there's another level. Just look for where price has been before. Just line up tops and bottoms, anything like that. And quite often they'll line up with major moving averages, or you'll have your averages off, you'll set your levels and be amazed that when you turn them on, like, wow, they're essentially in the same neighborhood. And that's not an accident. So all we're doing is following the chart. We are not here to pick tops and bottoms. I would prefer you find reversal levels than picking tops, right? Oh, I've got the top of the wick. Pat yourself on the back, right? But it's not the job. To find a reversal level like this on a weekly chart, is that helpful? Absolutely. You know, both up and down. But I mean, it's not the job to pick the tops and the bottoms. You just want to be able to get on the right side of the trade. Don't try and, you know, pick it by the penny. Make sure you get in a good spot. That's reasonable. But if you start trying to pick pennies, you're probably not going to get executed a lot of the time. Simply because that's not the job. The job is to get on the right side at the right time and then manage it accordingly. This big dump up here, you had lots of warning before this big candle, right? So if you're paying attention to the chart, whether you're a trader or an investor, I would be told, hey, something's up here. There's no surprise. There can't be any surprise that price falls. It's just the surprise at the velocity that it fell into the levels that it fell to. But this is why we say always have, in this case, a buy order at a place that you didn't think sounded reasonable, because one day out of a year you might hit it, and that was the day. Okay, but price will go to where it's been before. It just didn't go there by accident. It went there because it's been there before. And it's all you got to do is follow. Now, let's take a look at NVIDIA, because I know we've been keeping an eye on this, and there's a lot going on with NVIDIA, right? There's so much money in this damn thing that you have to wonder what happens when the money wants out. Not just to NVIDIA, but to the rest of the market. You know, the majority of the money's all in like the same 7 stocks. So if the same 7 people wanted to get out of a really thin window, it's going to get a little crowded. Not saying that's what's going to happen here, but because we just follow the chart. We talked about this a couple weeks ago. This top, this tongue, you know, wicking this upper value level and then just retreating. Came back, hit the 50, bounced. I'm not so sure it holds here. I'm not saying today is going to be the day that it breaks the 50, but I mean, there's a lot of downward pressure here. And if NVIDIA starts to fade, what happens to the rest of the market? I think that's a fair question. Now here's the weekly. Remember how we looked at the other chart, and when we see price start to move higher, with the more velocity that it moves with, the more that it fans out the ranges that we come back and test over time. So right now, when we look at NVIDIA's weekly chart, as bad as this pullback has felt, you have to appreciate that it's held the T line, which is our filter for trend, right? So you have to call, you know, be fair and call what you see. The daily has obviously been uncomfortable, but you're holding the T line on the weekly, and so far you're holding the 50 on the daily. If you fail this T line, then you're probably going to look for the 20. It would be the first touch in this wave, so you would hope that you would get support, but if you don't, you start to look to the next level down, which is the 50. Pay attention to this gap. You know, note to self the the gap above the upper value range on NVIDIA's weekly. Because if you start to fall into that, it makes it very likely that you find the 50 MA weekly. And understand that the upper value range is considered like, anything above it is essentially kind of like a premium. And if you were to break this upper value range and come back to it, like look at all the gaps in here. Now, I'm not suggesting it comes back down to 20 bucks or anything like that. I'm just saying that if it fades, comes back to the 20 for sure, and if it doesn't hold, you look to the 50 and so on and so on. But there's a lot riding on this thing. There's the monthly. You know, there's a lot riding on it holding. Now, this would have felt catastrophic to a lot of people coming back to the 20 on the monthly even, right? But when you look at that chart, just like we show on the smaller time frames, is all this was just a retracement. It was nothing more, nothing less than just a retracement. Hit the 20 and price bounced higher. You know, it didn't create a double top or anything like that. It was just a continuation off the 20-day moving average on a monthly chart, and it is still bullish. And on the monthly, you know, it's still trading well above the 5 EMA. But if stuff like this starts to fade, then it can feel very, very uncomfortable. Right? Here's Tesla. Is it fair to start with the monthly? No, let's start with the daily. Again, a great example of what happens when price goes parabolic, for lack of a better word. It fans out all those averages, which essentially are your ranges. So are you trading above the 20, the 50, the 200, which we're typically looking for? Absolutely. Came back, test the 20, bounce. This time you fail. Come back to the 50. Fail the 50. What do you think we're looking for? I'm not making this stuff up. I would be saying what happens, like we've said last week, what happens if you fall into this gap? Price will drop, or can drop quickly, and that's what it's doing. And where will it go? It will go where it's been before, and this is just the 100-day moving average that we're using as a very rough level for where price may go. Additionally, we're looking to the left to try and establish where it's been before. This upper value range level here kind of perfectly addresses this past price. So it makes this a likely target. And we're not, again, suggesting that it's going to happen in one candle, but as this move progresses, time will also progress, and perhaps the 200 and price will line up somewhere in and around that upper value range. But this is just a real nice example of when price goes a little parabolic, what it can do when it comes back. You look at the weekly, kind of that double toppy look, right? Two equal points in price anyways. Selling's kicking in. You look for price to come back to the 20, at least to test it. That would be a target. And that would be an area where you would either add to your short, take some off, whatever your style is. But knowing or having a reasonable understanding that price could come back there will help you tremendously. And again, knowing that you're trading in this gray area, which is light trading, all the density, all the real money's in here, right? And money is attracted, price is attracted to that, or that past price. Boy, this is a red-looking ugly day. It doesn't matter what we look at, we're just finding red. So this is Google's daily chart. Now, notice same kind of thing, right? Price just moves higher at a rapid rate and spreads out all of those areas that you have to come back or are likely to come back and test. The first being the 20-day moving average. We haven't produced a sell signal or anything like that. This could simply just, price could come back, take a little bit of a pause, right? And then bounce, could create another level up here, or it fails, and you start looking to the 50. Pay attention to, then this is all simple stuff, right? I know you guys do this, getting a real good hang of this. All of this gray stuff on the side is that light trading that price can move up and down quickly through, not to mention the gaps. But right now you've broken the T line, which is our filter for trend. Haven't closed below it, haven't produced a sell signal. Again, there's a few things working in the background that are managing that. But fail one level, look to the next. Totally reasonable to look to the 20, and that is at 273. If you flip to the weekly, same rationale applies, right? If you break one level, you'll find the next on the weekly as well. And you can see that the 20 on the weekly is way down here at 228. Like way down there. And that daily level, say 273, is well above the 5 EMA on the weekly. That's how bullish this thing has been. So coming back to the 20 on the daily, it does not even bring you back to the 5 EMA on the weekly. Wow. Tendency is that that kind of makes you feel it's still a bullish chart. Did these red candles, was this doom? Were those red candles the end of the world? No. Right? They weren't. And I think we're dealing with something similar here. Price traded too far away from the areas that it likes to be connected to. The horse is too far away from the barn, as they say. And again, the horse is a little too far away from the barn, and it would be expected that it come back to test these levels in here. Fail them, then we can start having a different conversation. But right now, still bullish, even with the negative price action. And when you have charts that, let's go to YM, which is the contract for the Dow. When you have charts that go basically nowhere but up, it makes the retraces feel like completely chaotic and uncomfortable. And again, all of this is a premium. Light trading, not a lot of money there. Where's the money? The money's down here. All of this stuff seems really unlikely, and yes, this is a dynamic range, and it does change over time. The shorter time frames, you'll even see them move occasionally. But I mean, when you come back and start to check these levels, you'll be able to hear the screams. But those levels that we're checking, you have to assume that that's going to happen as price pulls back, because that's just how price behaves. I showed that a million times. Right? This is the case with oil. Let's just take the noise out. There's two things on the chart: 1,000-day moving average, 500-day moving average. This is a weekly chart. Is this not the anatomy of a downtrend? Are you making lower highs? Yeah. You're making lower lows? Yeah. On this weekly, are you trading below the T line? Our filter? Sure you are. Does this start to look like a failed breakout that we show all the time on different time frames? Yes. And what happens when that takes place? Well, if it completes, it takes out that low. Sounds irrational. Here's the the monthly. The 1,000-day doesn't show up anymore, but this does. This is 3 months of positive price action. A lot of people got excited about that. But when we look at our monthly chart, there's no excitement here, because this downtrend is still intact, right? We have a tool that helps us determine what the trend is. And and the longer the time frame, the more effective it is. There's nothing to get excited about here. And because we use fractal analysis, we're looking at different time frames, the weekly that we just showed, the monthly here, and of course the daily. And obviously this is a target for price, somewhere in this neighborhood. But just for interest's sake, let's just go to the daily. I'll take off this other stuff just to clear it up a little bit, but I want to add the 50-day moving average, because it's, again, for me anyways, a very good tool for determining what's happening with price. And as we were going through this nice wave up, my caution was, let's make sure before you get too excited, let's see what happens at the 50 here, right? Because if anything's going to materialize, it's likely going to be at a level like this. And what happens? We start to fade it. Then we get a signal again. Then we come back to our original target of 61.66, which has just been chewed up many, many, many times, right? And now, here we are again. We talk about this every week, right? On every time frame. These are the candles that eat you up and spit you out. Doesn't matter what you're trading. Could be Bitcoin, could be ETH, could be anything. Doesn't matter, right? Oh, we're off to the races again. But what's the chart tell you? If you're just reading candlesticks, you're like, hey, those are three green candles. I'm going to buy those. Pay no attention to the wick pushing price down as a little clue, but that's another story. Where you're working under, you failed to 50 with a bearish engulfing candle. Not good. Next candle prints your sell signal. And you've already had the 5 EMA fading, because you can see that it went from white to red. Right? 3 green candles does not mean that you buy everything. What do you have again? Bearish engulfing candle. But are you surprised? No, you're not, because if you wanted to have a 3-day trade there, fine. But you saw that the trend was still down. There's your another shot at the 50, and there's the failure of the 50. Again and again and again. See how relevant this is? And if you're not looking at it, I don't know, maybe you're looking at other things, and that's okay. But I mean, it really does provide you with a lot of insight onto what's going on. So just like back here was, let's pay attention to see what happens at the 50. Let's pay attention to see what happens at the 50. The difference in this candle is that this big nasty thing closed well below the T line and the 5 EMA, and now all of a sudden we went from being bullish, now we're super bearish, and we've closed below those levels. And this current candle, we talk about this all the time, I don't like when it doesn't challenge in a serious way the 5 and the T line. This to me is weak, right? When it just this is like impulse down, and we show how sometimes you go sideways back to these levels, and then the trend down continues. That's what this smells like a little bit. And this could be absolutely anything, right? It could be crypto. These charts all read the same, right? You don't have to think that you need to learn a different type of analysis because you're looking at a different chart. Crypto to commodity to stock to whatever you want, right? It just doesn't matter. Here's Doge. I'm just picking something, right? And let's just flick on a little bit of context, 20, 50, and 200. And I think, there we go, turn on our volume profile. What can we learn? It's great to look at the chart after it's right, it's materialized, but to look at things as they unfold, and I think this is where the value is, because, you know, we look at it after the fact and you're like, okay, yeah, I get it now. But when you're actually in the candle by candle world, whether it be a daily candle, weekly candle, or 15-minute candle, it doesn't matter. You still have to analyze where you believe price will go next and making sure that, again, you're on the right side of the trade. This is a Doge daily coming out of consolidation. You get a nice green candle with a signal. Fine, right? You can take that candle. You can see the divergence start to open up. And when I say the divergence, I'm talking about the T line and the 5 EMA, our filter and our trigger. Now we're on the north side of a little bit of the 20 and the 50. And you can see, you know, the chart's telling us, the market's telling us that we're on the right side of the trade. Now, we see candles like that and we start to get a little bit suspicious. Is the horse a little bit far away from the barn? Yeah, when you see this air in here, and you know that price will at least want to come back and wick it, and if it's at the, you know, if it's going to be a trend move, it'll look a little bit different. See what you can learn just by following this divergence, right? The trend is still intact, the trend is still intact. And this gets ugly. Right back to the 50, you bounce around there. What's important here? Impulse down, just like we showed before, sideways, back to these levels, and the trend down continues. These impulses that create equal bottoms, you pay attention to those. They don't always reverse, right? But it's usually a little bit of a clue. But what else is a better clue? How about shortening your time frame so that you can start to get an idea, whoops, of what comes next. That would have been a little bit of an early entry for you. And you get a nice move, a little bit of support from the 50 and the 20. When this thing, I don't trade this, but it's obvious that when it spits out signals on certain time frames, it means business. So that's for sure, especially to the ones to the downside. So here's another ugly 4-hour candle. What do you think this 4-hour candle wants? And why? Anyone? Let's see here. Failed breakout. Right? So all of that is resistance. Right? That's your lower value range, I think. There's your 100 MA, your 20. Right? Look at these equal tops. Fall into this big gap. This is why we talk about this, guys. This here. Oh, this is what happens. This is a perfect example. So this really was a failed breakout, and this took no time at all in taking out that previous wave's low. But now that it's done that, what's it looking for? It will continue to do the same thing. It will look for, and this will help you with targets, right? It's going to help you establish where to look next. It's obviously looking for this level in here. Fail that, and you know, it just gets fugly. This is what it wants. There you go. There's your daily. This is why, Blunt, how come you use 1,000-day moving average? That's this bullshit. Nobody uses that. Yeah, well, price does, dumbass. How about that? How about that? How about that? How about that? Right? That's why. Everything is fractal. Whether it's on the daily or whether it's on a 5 minute, these long-term averages will give you ranges to work within because current price looks for past. Here's your failed breakout on the daily. This is just a simple failure of the 20. Like super clean. Bounce, fail, and it's going to come right back down here. And if it fails, what do? You got to start looking to the left or switch your time frame up. Uh-oh. There you go. It wants the 200 weekly. Look how it's loving the POC on the weekly chart. Loves it. Bang, bang, bang. Do you think it's going to bounce every single time with the 200-day moving average, which is our bull bear indicator on any time frame sitting there? Nope. It's going to come back. It's already tagged it. And if it comes back to tag it and it starts to fall into this gap, well then, because everything is fractal, you might end up with a situation where it's falling into the gap on this 4 hour, like it did here, right? This stuff repeats. Any time frame, any asset, it all repeats. So if you're, into Doge, keep your eye on that 13-cent level. That would be a target. And if you get into this gap, well then you just start looking to the left, or you can start to average, and let's have some fun with this because we're here. How about that? Somewhere in here. I'm paying particular attention to where I can connect the T-line or the 5 EMA. That usually ties in other levels that are pretty reasonable. So again, this is just a quick at a glance, but you don't want to have this continue. I don't like these big moves at all. So, and I'm sure you don't either. But I'm pretty sure that it won't matter what we look at. This is Litecoin. It won't matter. It's been around a long time too. No, these long-term averages, they don't mean anything. Nothing at all. It's just, 1, 2, 3, 4, 5, 6, 7 times that we've hit it, not to mention the 500 that you've hit. You're coming back. This is actually not looking really healthy, this market. Here's a weekly for Litecoin. What's it looking for? It's going to come back and do something down here or lower. So there's, as they say, is there something going on? Right, so there's obviously something going on. Now we have Zcash, and I'm going to use this because it's gone parabolic. And this is the daily. Don't you love charts like this? Congratulations to everybody, and I mean this sincerely, everybody that loaded up throughout time and probably took a little bit on the chin from from friends, but this thing literally just went ballistic. But as things go up, we already know that eventually they come down again, right? I'm not saying what goes up must come down, but it certainly does quite often. But this is just going to give you an idea of how to manage something that is running. Now, a lot of you will just, you make a little bit and you're so happy about that you'll cut it in minutes or hours or a couple days. But this is something that really, really caught fire back in, this is September of 25, so not all that long ago, right? And within no time, you can see what's happening here. All of this accumulation, and that's exactly what this flat trading was accumulation, couldn't hide itself any longer. As soon as money was coming in, that was enough to change trend and then start to give us this divergence, was a little bit of a clue that they weren't able to hide their accumulation anymore. And it's reflective in price, and it's reflective in the divergence that you see in our two filter levels. This will just look like one big giant rainbow because price went up so high so fast. Even in here, 5 red candles. Did that scare you out of the trade? No, the trend held, right? And this is just how we can weed out market noise from true trading moves, right? Noise. This is just noise. These are just trading moves, right? Little retracement, didn't change trend, support from the 20, and the beat goes on. And that will last for as long as it will last, until there's just not enough money to keep pushing price higher, or selling kicks in and it draws the other way. But when we were looking at this chart, well, there's a doji at the top of a bull run. That should get your attention. It always does. Right? There's our next candle that closes below the T line. Here we are coming right back to where? The 20. So when you break this level and you start to kind of see that divergence meld to the downside, where's it looking? Where's price going to go? We talk about it all the time. It's going to go to the 20, and that's where it went. It got support for now. Put that in quotes, for now. And what does it need to avoid? How about this? Right? And if it comes back to the 20 here and you fail the 20, you got to look to the 50. And the 50 is right on the shelf and just a bit above the point of control. So, if the trend down continues, you look for it to hit the 50 or this 20 here again. And if it fails that, well, then current price will look for past, and you fail one level, you will find the next. Price will be drawn down. Does it mean that it's over? No. Let's look at this ridiculous thing on the weekly. Right? So you can see that even with all this drama, it's just come back and literally tagged the 5 EMA. And then your levels on the weekly to the downside, same thing applies. You'd have to come and break the 5 EMA and the T line and have a lot of rollover to come back to the 20. That would take a lot to do that. But those are the levels. And you know what? You might not meet it until the 20 is way up in the 400s or something like that. Who knows? But this is just, as long as you're trading on this side of everything, it's still bullish. But knowing the downside risk is key. What are you concerned about? Oh, coming back to the T line and the 5 EMA, or failing and then looking down to the 20. That's all. Oh, this is getting ugly. How come this happens every Tuesday and Thursday? Why is this happening? Am I doing this? So, yeah, here's our weekly chart. We're failing that level. I think we're coming back here for sure. Yikes. All right. We're into this gappy stuff. This is light trading, so there's not a lot to help us, not a lot of substance to keep price up. So I believe that it's looking for some support, a bench where it can sit down, where it's been before, and it's looking like it's in and around here. So, geez, I remember saying a few weeks ago, everybody, I remember we talked about how, the 90s aren't today's problem. Yeah, they're today's problem today. That's for sure. And ultimately, I hate to say it, but when you have these parabolic moves in price, coming back to check levels is, albeit uncomfortable, is completely and totally technically appropriate. And I know that sounds batshit nuts, but it's completely appropriate what's happening. It just doesn't feel good. Right? It just doesn't feel good. And that's going to be the case on every chart we look at. And this is just getting bloodier and bloodier as we speak. And this is why today's thing was today's session is really all about why you don't want to try and pick the tops and the bottoms. because it's suicidal, right? It's just not something that you want to spend your time doing, right? Stay away from that game, right? It's just not worth it. This is something that we don't look at quite often. This is Cosmos, or Atom, as some refer to it as. This thing, again, talking about not being able to get out of its own way. This is the upper value range. And price just is completely boxed in. This is why we do what we do, because if you want to trade this, like, what do we want to do? We want to be able to track price and then trap it within a range so that you can trade it effectively with minimal risk. So this is ideal, the way that that's kind of printed out. Here's the weekly chart for Cosmos, and how relevant is the 50 here? Very. And it looks like this is a lot heavier and will continue. It doesn't look like it wants to stop. As long as you're trading below the T line and the 5 EMA, you just can't will price up. So, for example, here we are. This is starting to look like a failed breakout, coming back to do what? Take out those lows. And when you look at your stochastic RSI and your Fisher and your MACD, none of this is looking healthy right now. And it's, we don't do this because we want to talk about doom and gloom. That's not it at all. What we want to do is give you the ability to stay out of trouble. Sometimes the best deals are the ones you don't make, right? So sometimes the best trades are the ones you don't make. Remember that. This is MicroStrategies, right? No stranger to us. Remember this line we drew last week or the week before? Doesn't seem so silly now, does it? There you are at the 50 and the 200. Now, a lot of you who pay attention to, crosses and theories like that will say that's a death cross when the 50-day moving average crosses down through the 200. If you're to look at this chart now, it's actually very appropriate that it's called that, because that's exactly what this is panning out to be. Now, on the weekly chart, there's your toppy area. Again, we don't want you to pick the top, but I want you to be able to identify areas that will kind of look like reversals, right? Are you trading above the 20, the 50, and the 200? Absolutely. You're going to come back to the 20 as a test, right? We talk about this all the time. So just know that that's going to happen. And when you see those 3 red candles, you'll be looking for support at the 20. And if you don't get it, it could be problematic, right? And here you go, failing that level, finding what? The 50, but notice this. This is beautiful, right? Here's your signal in the most conservative of ways. Here's your signal. It's coming at a major moving average. So essentially you're failing a major moving average on a weekly chart that's producing a sell signal. This divergence is opening up, the T line and the 5 EMA telling you that there's momentum to the downside. Whoops. Still there. You expect to get a little bit of love at the 50, you would hope, right? But again, you've still got this divergence. So the market's telling you your trend is good. Just be patient, right? This is kind of our impulse down, and we're moving sideways back to the level that the T line 5 EMA. This time, you fail the 50. So it's no longer support, it's now resistance, right? The candles are just the family drama, right? They're really important, don't get me wrong, but honestly, you know, some of you are going to be heading into Thanksgiving, right? The candles are the uncle that doesn't shut up. Is all he does is talk and talk and talk and talk and talk until he's blue in the face, and no one really gives a shit what he's talking about anyways. Is all they're worried about is, you know, the main convo, not what Uncle Fred's yapping on about, right? Uncle Fred is just the noise. The candles are just the noise. The trend is the most important thing, right? The trend is the most important thing. No one cares what Uncle Fred is saying in here. The trend is the most important thing. Blah, 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 blah. You're going to hear lots of people say lots of stuff. The chart doesn't lie, right? The chart doesn't lie. And what are you doing here? You're literally failing the 20 on the week, on the monthly. But what's really important for me is that you're actually opening below that level. Like, so you open below the 20 on a monthly as you fail it, which you haven't done since, you know, a couple years. Nothing but up. See this here that I've circled, that we circled last week? This is the bench of past price that current price is looking for. This is the 1000 MA on the daily chart. And look how that has lined up perfectly with the 50. Why is that? Because we live in a fractal world. That's why. Everything is fractal. What we see on one time frame, we're going to see on another. Current price, this is MicroStrategies. Current price is looking for past price. Using our fractal analysis, we understand that when we fail one level, we find the next. On the monthly, we look at the weekly. There's that price. There's your signal. It's been nothing on the weekly but down. This is your flush candle right here. This may have stopped out a lot of people. Bearish engulfing that fails the 20 and the 50 on the weekly. All of this, again, all of these, this candle print is just the uncle that doesn't shut up at Thanksgiving. The only thing that matters, you're just blocking out his noise and you're just paying attention to the trend, right? Just pay attention to the trend. The candles are relevant, don't get me wrong. I'm just saying, to make sure you're on the right side of it, this is what you're focused on. And it's very clear because as those filters are T-line and 5 EMA, as they're crossing down through those other averages, you know that price is as well. Right? Those 3 green candles at the 50, they're just there to cause you stress. Right? These ones here. If you didn't look at them, you weren't worrying about them, you would just see that your trend is good if you're short and price is still falling. Where's it going? Well, we showed you on the monthly, probably coming back to the 50. Here's this level on the 200 on the weekly, and because everything is fractal, boom, ba boom, there you go on the daily. And this is how it helps you validate the direction of price. So if you're short and you're monitoring this trade, you have no reason on the daily to exit it. You have a legitimate target down here, validated by a legitimate target on the weekly, because again, you failed one level, find the next, failed one level, find the next, failed one level, probably looking for something in here, and you've got all of this past price, so it's easy to build a rationale on where this is going, and then there's your monthly. This level is right in line with the lower value range. How about that? And this gappy stuff in here on this monthly chart, wait till you hit this. Wait till we, like, you know, this is self-explanatory from this point. Current price is just looking for past. It's looking for where it can sit down, where it's buyers and sellers have shaken hands in the past. This is not complicated, and it's really not all that hard. You know, once you kind of repeat and play and repeat and play a few times, there's not a lot that you're going to miss. Here's Pirate Chain. We've talked about this a couple weeks in a row. Same kind of thing like Zcash, right? Or this big move up. And as price was failing the T line, right? What did it do? It came back and it would tag the 20 here, 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 and move on, right? And does this move seem rational? Of course not, right? No, it doesn't. It's great when you're on the right side of it and everything, but it's not a rational move. And you have to understand that price will, at some point, tag these levels. But just because they tag them doesn't mean you leave, right? This is just Uncle Fred not shutting up. No indication that the trend was changing. Plus, you get a continuation off the 20. Price goes higher. Here you do get a signal. This is a bigger move, but this kind of bottomy thing in and around the 50. Not exactly a touch, obviously, but obviously supportive, and then boom, what happens? Took out this high. Now you're failing the T line and coming back, just like we say, to check the 20, and that's what we've done today. And it doesn't necessarily mean that the end is nigh, right? Fail it, then there's a likely chance that you hit the 50 or come back and play with it anyways. What's it look like on the weekly? Pretty rich, right? But you're still holding the 5 EMA, and you'd have to come back to the T line. That's 51 cents. So 51 cents is roughly in here. So does price in the form of the candle and time kind of meet each other somewhere in there? Maybe. But that's what we can look for. Let's look at D-Wave, because I know that Rico's friend is trades this. I know we've looked at it before. Notice anything? You'll never see price this low again. You'll never see price this low again. Oh, well, maybe a little. Oh, here you go. Yeah, look. We don't have any control over that stuff. Because all we can do is follow the chart. And we have enough clues. It speaks clearly to us about what we can expect. Big move up in price, what happens? You fan out all of these averages that are the levels that you come back and check. Are you trading above the 20, the 50, and the 200? Hell yeah, you're trading above everything in this case. Did you come back and check the 20? Right? Obviously a little toppy. Yep. If you don't hold it, what happens? You fail. You know, it's not pretty, but it's done what we expect it to do. You're always looking, like as price has fallen and moving up into resistance, always be incredibly cautious that you're making the right trade at the right time, because when you're longing into resistance, it can really be problematic. Why don't you just wait till you get the market telling you that, hey, you know what, this is a safe entry when it prints this. Not these ones and all this kind of stuff, because this is all indecision. Now we can look back and say, oh, I could have got in for a fraction of a cent less. Yeah, probably. But during that time, the market hadn't decided on what its next move was going to be, and you ultimately could have been on the wrong side of it unless you waited for the right signal. But I know we've talked about this chart in previous streams. Did this thing do exactly what we would expect it to do? Yeah. break one level, find the next, break one level, find the next. And that's exactly what we're doing. And the same apply, I wish we could be looking to the upside, because we'd be, saying, oh, we're going to challenge the 200. And then once we break through it, we're going to challenge the next. And now we're into this gap to the upside, so it makes the 50 more likely, but we're not there yet. Right? And if we use fractal analysis to take a lot of the noise out of this chart, what have we done? It's not really funny, but it's kind of funny. We've come right back to the 20 weekly because everything is fractal. Continuation off support. This is what you would expect. Now, next week, you could bounce here, right? And we could be talking about, this kind of bouncing and then getting these two equal tops. And then the conversation will be, oh, is this a double top? I don't know. Was that a double top? No. That's just two equal points in price. It's not a double top until your pullback takes out that center channel. But that's not a double top. That's just two equal points in price. So there are going to be some people that are going to see that and they're going to try and cheat. They're going to try and front run the chart. And they're going to short there. Or buy puts, or however they're going to do it. The mistake being that the market was telling you that this trend up was still good. Right? There's your continuation off the 20. Support, support, support. So, no, that wasn't a double top, right? The market was telling you that. And now we're back to the 20. Like again, please understand, this isn't pin the tail on the donkey or anything like that. Oh, you were off by 0.2 of a cent. Yeah, probably. I also don't care, because I'm not here to pick tops and bottoms. That's the sucker's game. All I want to do is have the ability to recognize that this is a little bit on the toppy side, right? And that perhaps this is a reversal, with the understanding that, each and every time something looks top heavy, doesn't mean that it's going to crash to zero, right? Like, there are things that will come back. But you just have to understand that when you test these levels, this is what it looks like. One level at a time. Right? And I'm not being critical on D-Wave or anything like that. But if we look at this chart, we're working under a daily sell signal. This is a failure of a major moving average. Price retraced back to the 50 and failed the ice. This is an ice hole failure, all while being under a confirmed downtrend, and price has fallen back to where it's been before in the 100 MA, but it's fallen into a gap here. In all likelihood, we'll find the 200. What will prevent that from happening? A ton of money. Simple or as complicated as that. More money in, price go up. Money out, or not at the same rate in, price go down. These things that we see, like, I love these markets because everyone's going to say, oh, if we only would have known. There were no clues. There was nothing that we could have done. Oh no? Nothing? This is a daily. This giant ass catapult has just gone nowhere but up. And in the process has stretched out all of your ranges. And one day we're going to come back and we're going to check these ranges. Right? That's how it works. And let me just go. Let me just make a quick couple changes here. So what are we looking at? We are looking at a 1 hour, 4 hour, and daily chart of NAS 100. And hopefully you can see this. I know this top chart's got a lot of stuff on it. I can take some of it off. Anyways, just to give you an example of why we use fractal analysis. And you've probably seen me post charts like this before, either in our Telegram or on X. But here's why we do what we do. This 1 hour signal showed up today at 4 a.m. And it's basically failing the 1 hour 50-day moving average. Now, how do you pick up what, could be a trend move? Well, we filter out the noise, right, which we've done. This is obviously something serious. But we use fractal analysis. So we're going to take what, originally looked like a nice trade, and then we realize on the 4 hour chart that we're into a little bit more than a nice trade. That in fact, we're actually into something that might be a larger reversal to the downside. And you can see on the daily, getting the signal. That would have been Wednesday. So you're picking up all this stuff back here, right? But this is the most current. This is today, right here. So if you're short that, or you're trading futures, that's a fantastic move, because look, you're breaking one level, you broke the 500, you broke the 1,000. Now on the 4 hour, all of that translates into, you're looking for the POC and the lower value range. Right? That's what's just fantastic about doing this, is that it shows you well in advance when you could be into a runner. And if you look at this daily chart, look at this gap. Look at this light trading. Right? Yeah, it's blue and dense here on the 4 hour. You can see into the 1 hour, it's getting super light again, which means what? That the 1 hour chart could pick up velocity. And if it does, this 4 hour chart's going to pick up velocity and increases the likelihood that it finds this level. Remember, everything is fractal. We live in a fractal world, right? And current price is looking for past price on every time frame. So if we slip into this gappy light trading on the 1 hour, does it make it more likely that this 4 hour kind of continues? Of course, until the 1 hour reverses. Yeah, it does. But what does it mean for that daily chart? Well, it also means that if this 4 hour picks up speed, then this 1 hour could start to look sketchy too. And on that 1 hour, again, look at this gappy light trading. Your upper value range is sitting at around 22,143. But this is a perfect example of how to use fractals, different time frames, in your analysis to manage your trade. 1 hour sell signal, 4 hour sell signal. You never really lost your daily sell signal, but that's all confirmation. 1 4 hour that this is starting to look like a failed breakout. Let me look at it on the just on the daily. Yeah, so that's what that looks like. So you can see how to use this stuff over multiple time frames to help you manage the trade once you're in it. And I say that because a lot of people say, oh, I screwed up, I closed it too soon. Well, the only reason you did that is just because at that time you probably weren't looking at one of two things. Is the divergence in And our filter's still holding, and if so, then obviously you can stay in the trade. And what level are you looking for fractally? Can you identify something that price was looking for, obviously after the fact, that you didn't see before? And you'll find that using fractals just like this, I show this 1-4 and daily time frame a lot on different things, because this is exactly what I'm doing, right? And it doesn't matter. This is NASDAQ. Let's, for interest's sake, let's just look at, we'll look at Bitcoin. Whoops. There we go. 1 hour, 4 hour, and daily chart of Bitcoin. Same kind of phenomenon. Remember, what we what we see on one chart and time frame, we will see on another. Doesn't matter the asset. Failure of the 50, is that important to us? Yeah. So we failed the 50 on this 1 hour chart, not once, not twice, but 3 times. So if you didn't catch these earlier signals, then let's say you caught this one, like the one from today. You haven't produced, well, actually you still are under the sell signal from the 4 hour from before, but this is a real nice example again. Oh, down, down, down. This is a failed breakout, right? That took out the previous wave's low. That's the 4 hour. Here's the daily. Failed breakout, taking out the previous wave's low. And now that I have an understanding of what's going on all these different time frames, I have a better idea of how to handle this trade. Now, I don't have anything lit here to show me targets. I'm just trying to show you how to find a good entry on a time frame and then how to manage it. So you can see the failure here of the POC and the 50, and price starts to fade, and you've got that divergence. On the 4 hour, that this is looking like that failed breakout. Pretty easy to pick up. And plus the bonus, you are already working under a confirmed sell signal. In other words, the trend is down. The trend is your friend, right? The trend is your friend right till the end. So to access all these different views and time frames, just click up here in the top right, kind of beside your name or how you identify yourself, and then just click the view that you want. Right? I'm just going back to. So when we started this, I didn't think that we were going to come anywhere near this level as we're doing this stream, but here what we've done, we've taken out these wicks. So now price is looking for past, and again, benches of past price. If it looks noisy, just go to a longer time frame. And yikes. You can see what this is leading to. Does this stuff seem irrational sometimes? It does. I'll be the first one to acknowledge that. Right? It really does. But it doesn't mean that it doesn't happen. So failing this, like we've talked, puts this in play. I think we're going to hit it. Let's keep an eye on this range and level in here. And this is not what anybody, wants to see, but it is what we are seeing, and there's nothing we can do about that. Our only job is to monetize the chart. And in order to do that, you have to be honest with yourself about what you see on the chart. Like this Solana chart, I know we've been talking about it for quite some time, but the concern was that the trend here was down. You can see that little M pattern that we create on the 5. I love that stuff. Little trend line that we drew just to keep us honest. But this thing doesn't even want to challenge it. It's just broken one level, find the next, broken one level, found the next, broken one level, find the next. And I feel like the Scrooge today. I don't want to feel like that, but this is, these are not healthy charts. You can't give away, 3% day after day and then have a slight, push higher and think that that good things are going to happen, because they're just not. And look, this is not about being right or anything like that. I think a lot of people believe that it is, right? It's having the option to stand up in front of other people and say, I said this was going to happen and it did. Right? That's not what we're doing here. This is simply responding to what we see on a chart. And the chart will tell us what it has in mind. And, when you go parabolic, again, lack of a better word, when you go parabolic and you spread all these ranges out, you have to understand that at some point in time, you're going to come back and test them. And I hate to use this Bitcoin chart, but we're going to. And, you came back and you test the 20, fail, test the 50, fail. What do you think you're looking for? Past price and some sort of major moving average for it to make contact with. And hopefully it finds support. And if it doesn't find support, it will continue to look for it. This is, I think the daily chart might even show it better. But, what you don't want to have is on the monthly chart is this kind of staircasing effect that you see. Like, that's just trouble. You don't want that on here, right, on the monthly, because that's going to be a longer move down. Yeah. So hang on. Don't try and pick the tops and bottoms. Identify the reversal areas. Right? These bottoms like this at a major moving average, those are typically safe places. Another example over here, to go long. And of course, you have the benefit and the gift of that confirmation with the signal. And again, this is about making safe, profitable trades. Like, I can't stress that enough right now. It's not about, making money because of volatility or this, that, and the other thing. It's making safe, profitable trades. This is gold. We talked about gold kind of reaching this level, creating those two equal tops. And then we'll be having a different conversation. Oh no, is that a double top or is that just a continuation pattern? We don't know yet, but it is interesting to see that we did hold these levels on gold after a bounce at the 20 and not breaking trend. I try not to think too much, because if I think too much, I'll hurt my own head. I'm just going to follow what the chart's saying and what the chart's telling me to do and not try and argue too much, because that's where we get conflicted, right? That's where we make mistakes. Try not to get sucked into the tornado of Uncle Fred talking too much at Thanksgiving. Block out the noise, right? So if any of you have an Uncle Fred and he won't shut up at Thanksgiving, just tell him you're going to shut his candles off. Okay, so there you go. That's a lot less chaotic to look at, a lot less stressful, right? Do I trust my chart? I trust my chart. As long as that divergence is there, I'm okay. I'll trust my chart, right? The chart will tell me when it's time to go. But just trust your chart. You can see how you've come back and checked the 20-day. It'll happen again in one day. It won't hold it, and it will test another level. But again, that could just be a test of that level and a continuation. So every time price fades, it's not the end of the world, if that's the takeaway. Sometimes it feels like it, but it's not necessarily the end of the world. Here's your weekly chart of the Dow before we leave. Still bullish. Is today a big red day? Yeah. But on the weekly chart, we're still trading above the 5 and the T line. So, we have to trade what's in front of us. And, the time frame that you're trading that on is up to you. But this market is still bullish, but it might catch a cold, it looks like. But again, you got to trade what's in front of you. Look at oil, and you see oil fading again, right? What did this candle do today after this big impulse down? Didn't do diddly. Couldn't reach the 5 EMA to a test. Didn't have enough momentum within it to even turn it from red to white. But there's just not enough momentum and not enough buying there to make that happen. So this is still bearish. Impulse down. We'll see where we go from here, but this is still a bearish chart. Failing of the 50, very important. So the lesson today, don't try and pick tops and bottoms. It is literally a sucker's game, and that's one that you do not want to play. Just find the nice areas where you can identify reversals. Our script is helping you do that. Identify reversals, understanding, and then this is the system, what happens at resistance and where price goes from that point. Keep an eye on this 94.4 level. Keep an eye on the 500 MA on the daily. And we're going to come back on Tuesday and see where we are. But man, Tuesday feels like a very, very long way away. So I hope you guys stay well, have a good weekend, and we will talk to you at the beginning of next week. And if you're interested